Hi, I wanted to thank you, Rob, for the opportunity to speak today. I am indeed amongst very esteemed economic and legal experts. I don't purport to be one, but I hope that from my almost 20 years at Telstra I can bring some perspective on digital transformation that might be relevant here. Certainly, transformation and profound change for businesses is really nothing new in a capitalist economy. Schumpeter's principle of creative destruction is at work here. But the thing about the internet is that it's speeding up that creative destruction. It's really radically lowering the barriers to entry to a huge range of industries. And that's really what we talk about, I think, when we refer to digital transformation. I'd suggest that the days of talking about digital disruption are probably behind us. That suggests that it's something new or embryonic or that affects only a small part of an industry. And I think that for many, many industries, the digital transformation is already here. And so the session's certainly aptly named today. Over the past 20 years, though, if you just look back, we've lived through this digital revolution. We've seen the emergence of super-fast broadband. When I started at Telstra in 1995, we, had dial-up internet at home, and that's in my sort of career. Smart mobile devices. We were only just past the massive brick-sized mobile phones that people would carry around in suitcases, and then social media that just was completely, unheard of, unconceived, not to mention touch screens, which is another aspect of the technology transformation that we've seen. Today, 96% of Australians are online. Traffic on Telstra's ADSL network doubles on average every 12 months and has done so for the last 4 years. And since we launched our NextG network in the middle of the last decade, the traffic on that has also doubled each and every year since then. So today, 2/3 of Australians own a smartphone and more than 1/3 own a tablet. Peter's talked about the fact that this is not just a consumer change. He's talked about M2M. There are already 2 million M2M devices in Australia. And as he's mentioned, the expectation is that by 2020 there'll be 50 million worldwide. So connecting cars to freeways, refrigerators, machinery, mechanical equipment, all connected to each other, talking to each other, but very good question about how much data will they truly be able to exchange. So I do want to focus then on this reality of digital transformation. It has implications for industries, which are to be expected, but that doesn't make them any less painful for the firms that are going through them. And all the more so then you would think that this is going to be a challenge for policymakers and regulators. Particularly we see this just as regulators, competition regulators, have to grapple with the fundamental of defining the market in circumstances where you've got new entrants or new competitors that are able to completely disrupt, is the right word there, the traditional players. They are the source of new competition. They don't necessarily respect regulatory or geographic boundaries. And it's a big challenge, and it's something that I think our regulators are still coming to grips with. So we were very encouraged by the fact that the Harper Review did give a lot of attention to this. Ian talked about the sort of the digital revolution, which is the way competition is changing as a result of these technological developments, and the fact that the institutions and laws and policies all need to change to ensure that Australia can actually reap the benefits, the competitive benefits and the consumer benefits that this digital transformation brings. All the more so because, as Professor Harper noted, Australians are typically fast adopters of new technologies, of new applications and software tools, and it has meant that as an infrastructure operator we have had to very quickly expand and continue to invest in the infrastructure to support access to all of those technologies. We've had a number of examples of industries that are affected by this. Uber is the classic one that is mentioned, where you've got a new entrant, brings about lower costs to consumers, more choice, which is clearly a focus, but also can raise regulatory concerns about impacts on consumer safety because they are able to bypass the way that industry has traditionally been regulated. Now, of course, we all know that sometimes consumer protection is just protection in disguise, and that's where you've got to be able to draw some distinctions. And it's a real challenge for policymakers to recognise that and to be able to then capture the benefits, the consumer benefits of this disruptive entry, but at the same time ensure that where consumers genuinely do need to be protected, that they are still getting the benefit of safeguards, particularly where there might be some doubtful or dangerous market practices of the new entrant. So at Telstra, we are a business that is experiencing disruption in a number of our markets. You would be aware of technologies such as voice over IP as a traditional, as an alternative, traditional sort of fixed line telephony. We call it the PSTN. I'll try not to use too many acronyms. And then there's internet-based voice and messaging applications like the WhatsApps, the Viber, the social media platforms that provide for voice and SMS messaging. We also still partly own a directories business, and certainly online directories and search engines have reached huge change on what was the census business on the white and yellow pages, which were, a government mandate that we distribute those white pages directories in print, and still is, to every household in Australia. And yet we have this whole world of online, and I'm pretty sure none of you have opened a directory in the last year or more. Then, of course, as Louise alluded to, there's the myriad of content and content platforms, including the 200,000 Australian subscribers to Netflix, even though they're not launching until next year. Of course, the Foxtel platform, iTunes, etc. And then, of course, you've got the two-sided markets that have been referred to in the directory space, in the content space, and in many others. And the challenges of determining what's the market share where you've got new entrants that are free competing against existing players who have a different business model, a charging or a revenue-based model where they charge consumers. So there's another challenge for regulators. Telstra is responding to this. We clearly see a decline in our fixed line voice services in particular, and we are, investing in new growth businesses that will enable us to compete in this new digitally transformed world. So most recently you will have seen announcements of our e-health strategy, where we're investing in the technology that in itself is effectively likely to be a bit of a digital disruptor in the medical profession or in the pharmaceutical industry, the pharmacy industry, I should say. And also we've invested in a video platform operator called Uyala, who actually creates content that has a platform that enables content to be created for multiple different types of distribution platforms. So we're not just changing for change's sake, we are changing because it's very necessary to the ongoing success of our business that we adapt in light of the digital transformation that we're seeing. We don't want to be Kodak. Kodak invented the technology that underpinned digital cameras, yet where are they today? We need to be really innovating and adapting with the technology that is changing the way consumers can access a whole range of different products and services. Regulators need to adapt too. They need to grapple with this issue alongside the business sector, particularly when it comes to these matters of competition, law and policy, because these new entrants are affecting competition. This technology is helping to open up markets and is making markets much more dynamic. Markets are therefore, if they're operating well and dynamically and have low barriers to entry, very capable of throwing up their own solutions to issues which might historically have needed regulation to solve them. And I think that that is a fact that is unfortunately little recognised, but really needs to be factored into regulator decisions about how and when they intervene. It also is relevant to consideration of whether there might be, heaven forbid, scope to deregulate. We have a government that's actually committed to removing red tape, and what you need, if that's going to happen, is actual institutions that recognise that because markets are dynamic, because you've got this transformation happening, it may be that regulation we've hitherto needed could be removed because it's no longer needed. It was a little bit interesting because in a couple of the questions we've leapt to this idea of, oh, we might need an access regime for that. Access regulation is a very heavy-handed form of regulation. It's ex-ante regulation, so before anybody's done anything, it's regulated. And I think we need to be really careful about leaping to the conclusion that because these things are new and they're entering into traditional markets, they need to be regulated just like the traditional operators. In fact, the reverse might be true. Not only may the new entrants not need to be regulated, but the existing operators might need to be regulated less because of the competition that is being created here. I wanted to just give you a bit of an example of one experience we've had with the ACCC where I don't think they've really grappled with this concept of competition from new sort of digital entrants. Over-the-top players is what they're sometimes called. And it's in the ACCC's decision to regulate SMS termination. So SMS is, the messaging services that is offered by mobile operators. It's a competitive market. The retail market in which SMS is offered is so competitive that it's largely almost always free. So if you have any kind of mobile plan, it is more than likely you have a whole bucket of SMSs, probably more than you will ever use, included. So it's basically the retail price is next to nothing, which is just as well because the competition is also offering free messaging. So the iMessage platforms, the various social media messaging platforms that are around, Skype messaging, Viber, etc., Facebook, competitors to SMS. And this is widely recognised. Some research conducted by the GSMA found that over 50% of consumers not only recognise that these other messaging platforms are complete substitutes for SMS, but they're actually using them. So that research wasn't focused in Australia, but they did focus on a number of jurisdictions. And it is very clear that these messaging platforms are used as a substitute for SMS. Yet the ACCC just decided that for the first time in the history of the mobile industry in Australia, they need to regulate the termination services as between operators for SMS. It seems they largely disregarded the competitiveness of the market there and actually are a bit at odds with their US and EU counterparts. Of course, the ultimate irony is that all of these messaging platforms themselves are not interoperable. You can only iMessage someone else who has an Apple phone. So we're actually not only mandating but also now going to regulate the price of the interoperability of operator-provided messaging, but not only are we not regulating or not even really recognising the competition from the others, but they actually don't have any obligation whatsoever to be interoperable. So it's just a little case study, I suppose, to illustrate that there's quite a lot to grapple with here, I think, for policymakers and regulators. And that's one of the reasons that our submission to the Harper Review talked particularly about the importance of just examining the incentives of regulators to regulate and making sure that the right accountability is in place, particularly where the harms from regulation are not immaterial. Harms from regulating where you don't need it, do need to be taken into account. And it's important to make sure that we're not regulating where we don't need to. We're not regulating where the market can solve the problem for itself. And it's important to try and create a level playing field, actually, for all these sources of competition so that, competition can truly thrive and consumers can truly benefit from this digital transformation. Thanks, Rob.
Any questions for Jane?
Speechless. Okay.
All right. Well, there will be an opportunity to
I might go in this way.
to ask further questions when we move into the panel session.
Oh, she's gone down.
Shuffle along, and now I'll ask...
I'll shuffle off.
Sorry.
See if I can
who
find my way around the back here.
to wander up to the podium.
Thank you. Oh, here we go. Well, by an extraordinary feat of sort of non-coordination, I'm going to talk about a different part of the economy and its digital disruption. And that is, I guess, digital disruption on perhaps what I call the sort of the bricks and mortar or the sort of physical things in the economy. In particular, been mentioned, but taxis being one case in point. So what I do in my sort of professional life is apply competition law to industries, and the Harper Review has sort of rightly identified this area, or the digital sort of economy, as being a huge fundamental to the future of the economy, and so very important to focus on the reforms with that in mind. And there's no question that this part of the economy is going to have a massive impact on consumers. So what I'm going to come up with today is sort of a few recommendations I have for the application of competition policy and law to new technologies, but focusing again on the real economy. And they really come down to being flexible and responsive in changing regulations that exist in specific markets, particularly when there's new technology, and just taking account of the very different issues that come up in the application of sort of everyday competition law to new technology industries. And then, and also I want to say a little bit about what competition law might have to say about strengthening the ability of consumers in the process of what I would call product comparison, which is sort of a critical feature or critical function that we've been able to make much better use of in the digital economy. So first of all, just a few examples of digital disruption that sort of go beyond what we've talked about. We've already talked about Uber and GoCatch. So taxis is a big one. I'm going to say a little bit about online, the idea of booking a hotel room. So online travel agencies. We know, oh, I've lost the panel. Found the panel. Even pizzas. Domino's has said its technology is very important for them, and the way that pizzas are audited and created and tracked. We all know about iPhones, Google, and compare the market and other kinds of things in what's known as meta search, which is really important for product comparisons. Banking is an area that we've touched on that's coming up. But also, I'd note finally, even education. Apparently I can get a bachelor's degree of economics from Harvard for a princely sum of $42,000 without actually leaving Sydney. So, you know, that's a very interesting example of, to my mind, digital disruption. I don't know how good that economics degree is, but certainly it's a good place that appears to be offering it. So what does that mean? I mean, the first thing is a lot of industries are regulated with specific arrangements, and I'm going to talk a little bit about taxis because actually I take a lot of taxis, but I've also, for quite a lot of years, it happens, for no money, I might say, I've spent quite a lot of time studying taxi regulation, and partly because I'm just interested in its the bizarre nature of it and how it really does, it really is unhelpful to the people who actually want to use taxis. But what we can learn from that and many other industries is that regulation is fundamentally industry specific, is generally designed around current technology. But it often acts to entrench that or entrench other things which are a consequence of that technology. And really it's very important to remind ourselves that the central objective of most well-designed regulation should not be, you know, keeping in place anything other than protecting consumers, which is for sort of everyday products. I mean, we might have environment protection, but just thinking about everyday products that don't have any special features, fundamentally it should be there about consumer protection. But when things change, that regulation needs to adapt very quickly. And the question is, well, how does that actually happen? Because I think from a policy point of view, we're actually governments and the policy makers are pretty bad, frankly, at, and taxis is a great example of going through the process of reviewing and adapting and changing regulatory arrangements where there's a crying need from the point of view of digital disruption. But I might also offer, not necessarily as criticism, but perhaps a gentle suggestion. It does seem to me that digital disruptors could also be more proactive in thinking about how and promoting discussion of how regulations could be adapted to fit the business models that they want to operate. So here we are, just to sort of apply some of those or think about some of those in the context of taxis. And as I said, I know a lot about taxis. Firstly, I do take a lot of them. I even run my own ride-sharing service daily, and especially at weekends, taking my kids from various activities without any form of payment, however. But the sort of fundamental difficulty, it seems to me, with the taxi industry, and this is very much a sort of industrial economist perspective, is that, frankly, demand is extremely peaky. And, you know, there's at beginning of the day, end of the day, on Friday, Saturday night, probably Thursday night, everyone wants a taxi. And we all know, because that we can never find one. And fundamentally, the industry is extremely poorly organised for what I would call the sort of helpful supply-side responses that might be able to deal with peaks. I mean, fundamentally, taxi regulation restricts the number of licensed taxi cabs so that people can sort of drive a taxi all day and make a sort of tolerable living from that, even though we know that for typically a third or half of the day they're not going to be doing anything, which of course means that when I want a taxi along with everyone else, I can't find one. And fundamentally, that is a sort of bad situation for consumer welfare, and it's not even, if you ask me, a great situation for the taxi industry, although the restriction of the number of taxis has obviously benefited some people a great deal. So one of the things that I would sort of characterise ride-sharing services like Uber is that fundamentally, apart from sort of matching, you know, people who are willing to engage in a transaction, but fundamentally it has the potential of massively increasing the efficiency of the need for people to get a car to take them from one place to another at peak times. It allows people to sort of dip into being a taxi or ride share or ride offerer without having to commit to doing that all day, all week, and so on. And that's extremely, from an economic perspective, extremely efficient to be able to get existing vehicles and just have them offering rides for, you know, times of the day when people need them most. And I think it's very important to remind ourselves that that fundamentally is what I see as Uber actually doing. Now, it's doing that digitally by allowing passengers to connect directly with the drivers of vehicles. And that's something that is essentially what the digital revolution has allowed to happen in an extremely efficient way. So we would all know, if we tried to catch taxis a few years ago, that you ring a number, and because you're probably wanting to catch this at a time of day when everyone else is ringing that number, you could be many, many minutes before you even get a machine to answer you. And then you would say, you know, I want a taxi from A to B, and the machine would say, you know, yes, your order. You couldn't talk to anyone. Even if you got to talk to someone, do you ever think you'd get a prediction from when that taxi would actually arrive to offer that service? I mean, fundamentally, the industry was not organised to actually give people what they wanted. So we've got an app now that does that. And of course, the usual issues have been raised about you know, whether that's safe, whether the drivers have got criminal records, and you know, the whole sort of what I would call and quite reasonable consumer protection side of things. Now, of course, Uber would say that they have ways of, you know, rating drivers and all of the sort of things that technology allows us to do to talk about the quality and the ratings of other users of drivers. But, you know, it may also be that that's not quite enough. But what I think it's very interesting to just reflect on what has happened in California in response to the sort of this disruption. And California was the first jurisdiction to recognise and regulate services such as Uber. And what they did was they created a new category of regulation for transportation network companies, not taxis anymore. And the regulation of those companies essentially regulates or it gives a sort of licence or a seal of approval to a driver after background checks, checking they've got training, drug and alcohol policies, minimum insurance cover, and those sort of things that you'd kind of want to know that your driver had, but no more than that. Now, by contrast, every taxi and therefore its driver in New South Wales must belong to a network, which is sort of one of the 3 or 4 companies. If you want to get a taxi in a traditional way, you've got to ring that network who then organises the taxi. And so that network is the old way of performing that interface of 1, coordinating taxis, and 2, it's a sort of means of sort of one of the means of administering these sort of the fact that only licensed drivers are driving taxis and so on. But fundamentally, that requirement for an old style taxi to be part of a network is just not necessary anymore, and it's being overwhelmed by the sort of individual, the coming together and the ability for individuals to talk to each other through Uber. Now, it's interesting to see what has been the regulatory response in Australia, and to my mind, state governments and taxis is just sort of the absolute bottom of the barrel in terms of industry protection. So we've got, in the first instance, transport authorities in this state declaring the service illegal. If you read the Sydney Morning Herald yesterday, you would have seen about sort of hire car drivers conducting citizens' arrests of Uber drivers, and then, so it's just this incredible sort of process going on of the old industry fighting back. But what the New South Wales government is doing is it's began considering its response to ride sharing. I mean, it must be able to figure out what's happened in California, just as I can. But interesting, what's the quoted considerations in that response is an assessment of the benefits to consumers alongside the impact on the taxi industry. Now, I put it to you that neither of those things have any relevance to the question of how you deal with Uber, because the benefit to consumers is clearly shown by people that want and use an Uber app to go and get a ride. That the consumers, seem to me, are speaking for themselves about the benefits, and we should just let them do that. I don't see how a government review can really seriously suggest that they should be telling us, the consumers, what kind of taxi we should be wanting to ride in. And it's also hard to see why the impact on the taxi industry has got anything to do with it either. And really, it seems to me that it's pretty obvious what the regulatory responses will be, which is something like to put in minimum sort of consumer protection arrangements to be sure that your Uber driver has, got a car that's fit to be a car, that he or she is fit to be to drive that car, and so on. So, I think there's a real challenge here for the sort of keepers of regulation in these industries to respond in a timely way. I mean, this is not something that really should take 2 years to figure out. This is really something that should be able to be done in a matter of weeks to see what the problem is and deal with it. But I think what I think is also interesting that I mean, maybe it's happening behind the scenes, but I don't see any obvious moves or by Uber in New South Wales to say, well, look, here's what they've done in California, why don't we do that here? Instead, I see sort of what appears to be a sort of fighting the, perhaps proposition that the Uber service is illegal, which is, I mean, maybe it is, maybe it isn't, but it seems to me the one thing that the Uber people and likewise could think about is engaging in a constructive way of how to deal with what is perhaps we would all agree an issue about consumer protection and how to ensure that you get it. So enough about taxis, but I think it's a microcosm or a great case study of many things that are sort of wrong with the way in which we deal with quite a significant competition policy issue in essentially what's an old basic economic service that many of us that could be improved massively. a couple of other things. I mean, the Harper Review didn't actually really make any specific recommendations about how competition policy should be changed or applied in the light of this digital disruption. And I want to offer a couple of things that are really more along the lines of encouraging or just recognising some of the challenges. We've already, and I won't spend much time on it, there's already been two speakers have mentioned, not even, I should say, the economists. I mean, I'm the only economist, but even people who are not trained in economics can recognise that digital disruption is the digital revolution is giving rise to what economists call two-sided markets and network effects. And perhaps all I should observe is that this is an area of challenge which, frankly, the economics profession has not really risen to. There's a Nobel Prize waiting for the person that can figure out how properly to deal with just market definition in two-sided markets, because our standard framework that economists use for defining markets with two kinds of consumers, some who might pay, some might not pay. Our standard SNP test framework, frankly, just doesn't really cut it in defining these markets. So even before we get to the question of whether there's competition effects, two-sided markets are a massive challenge for just defining, who competes with whom. So the basic principles of competition economics still apply, but there are huge challenges. And what we, I think, see, putting aside the problems with market definition, is that what the digitisation of the economy is really doing is that there's much more competition for an entire market. So we have network effect, two-sided networks that develop in order to Airbnb or some sort of all kinds of platforms that bring people together. But the competition issue really is someone that comes up with a better way of, or a slightly better way of competing for the same kind of service. And the prize for that is not just a bit of market share, it's actually taking over the entire market. And so that's something that's actually, I mean, of course, Schumpeter reminded us many, many years ago that this is what it was all about, but digitisation is a very much expanding and giving a lot more emphasis to this kind of competition. Just to give you perhaps an example, and this is a merger that this is about it was recently the ACCC considered the merger, the takeover of What If by Expedia. And at one point in this process, the ACCC characterised this as a 3-to-2 merger in online accommodation bookings, and put out a statement of issues suggesting that perhaps it wasn't a good idea. And I think some of it ultimately was cleared and absolutely properly so. But I just want to give you a bit of a timeline of accommodation bookings in Australia. So it started obviously before 2000. It was phones and bricks and mortar shops. Then What If came in 2000, and interestingly, at that point, you may not remember, but What If was a marketplace for online booking of hotels with a 7-day lead time. It was very much the last-minute service, and then a year later extended to 14 days. It became 28 days by 2005, and by that time it had a 36% share of the market. Expedia came along and got involved, and since then we've had a very fast-changing picture, which I'll summarise in one click. But the bottom line is that right down to the bottom is the important probably development here is, first of all, the ability not just to find an accommodation provider, but actually to book online, to sort of close the deal through that platform. And then most recently we've had both Google and TripAdvisor, both coming from completely different kinds of service, offering meta search arrangements where you can actually compare all the hotels available in Melbourne next weekend, and not only compare them but then click through and actually book them. So and actually at some point in this process, I think about 3 or 4 years ago, What If's growth stopped and it has begun to shrink, and it has been taken over by Expedia. So a very, very fast-changing market, and perhaps one of the most interesting, we all know where Google's come from, but TripAdvisor started off only a few years ago as just a place to post your comments about a holiday location that your friends might want to see. Now it's it's a meta search provider, and you can click through and book almost anything anywhere in the world. So to me, that just really underlines how fast, or first of all, the importance of digital disruption, and the importance of competition taking out or presenting the ability of new innovation to take out a very large part of a market. And of course, the end of the story was that the ACCC cleared the merger on account of the dynamic nature of this industry, even used the word disruptive developments from smaller online travel agencies from companies in the online sector, particularly meta search providers. So there's, I think, a good example of the ACCC, maybe a little bit slow, but nevertheless got there in the end to recognise the very different nature of competition in the way it had been developing that industry. So just to wrap up, I think another area which I'll just mention quickly, that we have talked, some of the other speakers, about data, and there's lots of questions arise from that, but I sort of pose a question which is being ventilated in the UK by the Office of, I think it's the OFT still, but and this is about the power of data to allow consumers to exercise more, in a sense, to increase the power of consumers in intensifying competition in all kinds of sectors. And I'll give you a couple of examples. And these are what if, to sort of use a bad pun, these are what if questions. So what if consumers had access to their own data, the data that they've created about how they use their mobile phone? What if you could get access to that from your mobile phone company? It's yours. And take it along to another mobile phone company and give it to them and say, or take it along to a comparison site that you can put in your data and find out which mobile phone tariff structure or deal would be best for you. What if next time, and I'm sure people have had this experience, you go online shopping at one of our 2 major supermarkets and you spend a load of time sort of putting in all the things that you want, and hopefully it doesn't crash, or your sort of child doesn't come along and jump to another site and close it, something doesn't go wrong. You spend half, 3 quarters now sort of setting up your internet shopping order with Coles or Woolies. What if that supermarket had to give you your data about what you're buying, and you could take that and plug it straight in, if you started with Woolies, straight into the Coles site to see if exactly the same shopping basket will be cheaper if you got it from there. Now that very question is being sort of aired in the UK by the OFT, and lots of competition policy issues about, whose data is it? Well, it's mine. It's about what I buy at the stores, but, can I get it from the person that I've given it to, and on what basis? But I just think it's an interesting question to think about the power of data being used in that way, and a real enhancement to the role of comparisons, really all enabled by the digital economy. That's all I've got to say. Thank you.
Thank you. Are there any questions for Greg? Stay there for a moment and then I'll pull you back into a panel. Any questions for Greg? Peter?
I'd like to tell a story, just a very quick story. My wife is a sort of 3-star with a bullet reviewer on TripAdvisor, and I'm a nobody on TripAdvisor because I never leave reviews on anything. And I noticed on a recent holiday that we had, where she did some bookings and I did some bookings, that she got completely different service from the people that we were dealing with to the service that I got. And not only that, at the end of our stay at the respective institutions, she was actively solicited by the institutions to place a review of their institution because she is a star reviewer. So that's just an example of kind of the power of consumer data. And I think, where Greg ended about consumer data stores that they're talking about in the UK and empowering consumers over their own data, I think that is going to be an important feature of big data going forward.
Interesting story.
Any others for Greg? Okay, well, what I'll do is ask all four of you
Come
to
back.
get back.
Do you think we have to sit in the same order?
Yes, no, whichever. So not sitting in the same order.
Trying to mess with you, Rob.
So what I'd like to do now is firstly just thank all of the panel members. I think that we've had a set of 4 very interesting presentations, and they've covered a wide variety of topics, which I'd love to be able to say was through meticulous coordination, but was actually through saying, well, talk about whatever you like, really, and coming to a range of, I think, well-fitting presentations. So Louise talking with an emphasis on content, Peter talking with an emphasis on data, Jane talking about an emphasis on the delivery of that data, and Greg bringing us back into real-world issues with examples of Uber and the way that the taxi industry runs, which still puzzles me, because why are the drivers so upset about Uber? I can understand the plate owners being upset, but the drivers, it represents an opportunity rather than a threat. But that's just me. What I'd like to do now is to draw together some of the thoughts that we've heard, and to do that, what I'd first look for is questions from you on all of that you've heard, that I'll try and put to all of the panel. So, yes, please.
Jenny Mack, I'm from the Superannuation Consumer Centre, and as we're sitting in a finance and regulation sort of forum, I guess I'm a bit interested in your views about where the disruption might come from in the superannuation sector. So, in banking, we've seen peer-to-peer lending, we've seen payment systems, and a few other little things. But I guess I'm interested in the superannuation system because it also seems some of the disruptions we've seen have been in markets that aren't as heavily and tightly regulated, but also are global markets. So any thoughts on Australia's, $1.8 trillion superannuation system that has considerable consumer frictions in it?
Well, one thing I'd just say is that I've been out there looking at a whole lot of different technology and innovation. I see technology coming down that is really going to change that, where it will mean that there's some technology out there that just collapses the window from me going to an advisor, asking about a plan, etc., etc. It's someone externally putting it together for me, taking 6 weeks, etc. There's some new software coming out that will completely collapse that. And I think what it will mean for the market is that people who would never have thought of self-managing super in the past will have access to that through the technology. I also just think there's this democratisation of information about superannuation and access to the tools to do it to myself that will be the jump that actually makes the difference that we've seen in a whole lot of other markets.
Well, a good first start would be to make the rules intelligible. I just think it's remarkable that so many people's well-being is dependent upon a system that next to none of us, me included, can understand. So step 1, make it intelligible. Step 2, make it easier for people to move. Make it easier for people to use multiple providers. And I just think of the barriers through the, what is it called, Future of Financial Advice, whatever it is, that just completing all of those forms and other crap that you have to do to engage with a financial advisor, where typically you can't conveniently download the data from multiple sources that you need to bring together to complete one of those forms. So the democratisation of data by giving consumers digital control of information from various sources about themselves is, I think, incredibly powerful in itself. And I think the changes that we're seeing in the accounting industry that flow from things like Xero, or there's a new service called McCloud, which is effectively a free Xero, that is based upon a social networking model are incredibly powerful because they enable people to move between providers much more easily. And I think the problem with superannuation is, one, it's unintelligible, and two, there's far too much friction in that sector.
I think I'd agree with all of that. I think there's a link between the two. There's not much point in democratising it if it's still unintelligible. So it is important that you simplify and recognise that there'll be different appetites for information for different types of customers, and make sure that you are providing the simplicity of information, of the critical information that people are going to be able to need to be able to make decisions.
What do you think, Rob? You've thought about this more than any of us.
I should give Greg a chance first, though. No.
Look, I'm not a great crystal ball gazer, but I would observe that it seems to be a sector where there's very, very high costs for the service that's provided, and so it has to be ripe for some sort of disruptive development that will really bring those costs down. And I think what's also important is, in a world that we live in now of very, very low returns on your money, it's hard to find, the sort of high returns. The amount that you pay for the management of that is becoming sort of increasingly important, and so then that really reinforces seems to me the imperative for change. I mean, there's lots of initiatives which I'm sort of peripherally aware of, the ways that sort of make it more portable, but I'm not really sure that they've fundamentally harnessed what technology could ultimately offer. So maybe there's an opportunity for some people to reform it in the way that we have seen in other industries.
I think there are. I mean, MySuper is one example.
Yeah.
I think there are issues with data schemas that actually MySuper's enforced, so therefore businesses transfer money to super funds in ways which are now at least standardised, as opposed to every single super fund setting up an alternative measure. What's not done is the portability of data. Yeah. So if I want to move from, let's say, just as an example, but it's real, from legal super to UniSuper, well, actually, I have to fill out all the transfer itself is relatively easy. I just fill out the films, set up what the fund should be, and actually, should I go into the default fund or should I not? If I remember, I'll not take the insurance because I actually do manage insurance separately, and it's all too hard. And perhaps the democratisation, the first stage of democratisation, is actually getting to that level of engagement that says, it's $1.8 trillion, for God's sake. That's bigger than the GDP of the country. It's greater than the sum of the market caps of all of the publicly traded companies in this country. And it's yours, and yours, and yours, and yours, and most particularly, it's mine. But for most people, maybe the greyer the hair, the more it gets to be important, but for most people, actually getting engagement with that 9.5% that your employer puts in for you each month, that you see not on your pay slip, because your pay slips are always electronic these days, but it's your money and you've got your right to actually do something with it. So perhaps the precursor of democratisation is education and understanding. And I know that's trite because it's actually a very difficult thing to get across to people, that if you said to most people, well, actually, nearly 10% of your pay is something which is entirely under your control, say you've referred to it as a bonus, then there'll be a lot more concentration on what happens to it. So people worry about bonuses at 10%. Actually, they worry a great deal about bonuses at 10%, yet the super at the same sort of level, it's very hard to get the same engagement. Mr. Armstrong, sir.
like all of us, I've been racking my brains trying to think about a way ahead. I just would like to ask if any of you guys have thoughts about another aspect of the problem. 40 years ago, any educated person could read an act of the Australian Parliament and understood what it was attempting to do. I'm not sure whether that applies to the tax acts, but certainly everything else. Even 20 years ago, one could. The original Trade Practices Act relied mostly on principles, and the way change, contrasted with now, when it can be confidently said, and this is an absolute scandal, that probably not a single member of the House of Representatives or of the Senate knows what the laws for which they vote mean. If you're lucky, it might be the minister or a sort of junior minister who's got lots of advice saying, Minister, this is what it's supposed to do. Hard to see how, with that sort of legislation, we can be ready to address change. There was the old-fashioned way was actually much better for addressing issues with taxis or anything else. Namely, if a change was needed, a targeted English language amendment could be made, not introduce 2 more divisions into an act, but a change that might take half a page, might take 2 pages. And the other part of the way Australians and many countries still do it is that you have regulators with a statutory mandate in broad terms who are then told to be continuously responsible for fixing the problem. Hard to find such regulators anymore. In fact, the Trade Practices Act gives more freedom to those responsible than most of them, where the executive government has sort of taken control and takes refuge under incomprehensible and absurdly long legislation. Do you think part of our future in being adaptive might actually involve going back to the traditional form of parliamentary democracy? Just a thought. Radical, I know.
Any comments?
Well,
I can speak. I mean, I can speak generally. I suppose maybe others can pipe up. But I mean, you highlight, Mark, that I won't comment on the indecipherability of legislation. But there is that tension between providing legislative certainty, and particularly, as markets are adapting and changing, to actually know what the law is actually pretty important. It gives you investment certainty. It helps you know whether what you're going to do is be regulated or not. In contrast, if you've just got sort of a principle enshrined in legislation and a wide discretion to a regulator, it is very adaptive, and that's essentially, I think, what the Convergence Review was recommending, sort of more, principle-based regulation in the convergent sort of media and comms space that could then, adapt to develop rules where necessary as new developments occurred. So very adaptive, but also highly uncertain, and so creates a lot of investment uncertainty. Creates an environment in which innovation is inherently more risky, because if you innovate and succeed, you don't know whether your advantage is just going to be regulated away. So there are pros and cons of those two approaches. I think the answer is something we'll all have to think about, because it's a very relevant question, but there's challenges both ways.
I actually think there's a broader question, and it flows out of a pretty simple principle, and that is that the marginal cost of production of words has fallen to almost zero. And therefore, many people are producing many more words. And you then analyse the incentives around their production of words, and frequently the production of words is to obscure meaning or really important words. And I use as Exhibit 1 virtually every privacy policy published on the internet. And I invite you to point me to privacy policies that state the most important privacy invasive uses anywhere in the first 3 paragraphs of the privacy statement before they tell you all the wonderful things about the service provider. And product disclosure statements, exactly the same. And we've allowed regulators to make volume of disclosures a substitute for intelligibility and succinctness. And I said regulators, regulation and regulators. And if you have some sympathy for the future of financial advice views of the government and anti-red tape agenda, it is a sympathy that more words don't mean more meaning or more understanding in the public. And I just think we've got to strip back a lot of those things, and we've got to find more common languages across contracts to enable people to make easier, more simple comparisons more quickly, rather than getting lost in a sea of words and therefore doing what we all do, which is click, I agree.
Yeah, I mean, there should probably be some sort of a common sense sign-off on a lot of legislation that actually means somebody else can understand it. I started my life as a journalist, so when I'm sitting on the Convergence Review with 2 other people and I'm sitting with a secretariat and people who do draft legislation writing words, I said almost every day, no one understands that word. And they'd say, well, Louise, it means, I'm like, no, I understand what you mean. This is a document for Australia. It's not for a bunch of other regulators or a bunch of other lawyers. You have to write it so that everybody understands it. So it's partly a problem with regulators and policymakers and government, but I also think for politicians it's their responsibility to understand it and to make sure that their constituents understand it. And I think if you look at something like net neutrality, and if I don't know how many of you have seen that John Oliver clip on the internet where he explains net neutrality in half an hour, and he actually keeps cutting away to guys sitting in Congress or the FCC reading out net neutrality and the true definition with people falling asleep. But you can explain anything to anyone, and if it's a really critical thing such as privacy or competition, then you know, it is the responsibility of the politicians to understand it. I think the Harper Review is a good example. It's quite easy for anyone to understand the way that's written.
I mean, it seems to me that first of all, the Harper Review, one of the questions was, had to be on the table was, should there be a sort of fundamental rewrite of the whole Competition and Consumer Act to simplify it? Because it is, you know, any view, it's got increasingly complex in parts that are obscure and hard to deal with. And, you know, there's recommendations on simplifying and changing the cartel provisions, but the recommendations are a step back from that fundamental rewrite. And so I guess I've asked myself, well, is that right or not? And I think if you're interested in that question, you might reflect on the United States, where they have some pretty sort of foundational, simple competition law that, you know, the Sherman Act's over 100 years old, it's never been changed. And, you know, you think, would we be better off with that kind of arrangement? But I think before you even start to think about that question, it's not obvious to me, and I've spent quite a bit of time with US competition lawyers and economists, it's not obvious at all that competition law is much more straightforward to apply in the United States than it is in Australia. And why is that? Well, I think 2 reasons. One is that the courts have interpreted and defined competition law in the United States, so they have a much bigger role. And secondly, the reality is that the economy and the way that people operate in it is much more complex and intricate than it used to be when, you know, at the turn of the century ago when these things were written. There's many, many more complex arrangements in place, and the task of working out, say, for misuse of market power, what's pro-competitive, what's anti-competitive, to take a sort of basic example, is extremely difficult. For even the economics is not always that clear. The principles might be clear, but the knowing, when you see some conduct, whether it's which side of the line it falls, is genuinely hard. So I know it's not much of an answer, but I think the reality is we have what we have. I think Peter's explanation as to why is a very good one. I think the reality also is that to take the big major form of any law, we've actually not got a very efficient law-making capability in this country at the moment. The Senate is, we actually don't have a very good ability to pass. Laws are ultimately the product of negotiation in quite complex situations. I think even if we set about saying we want to reform this law, as good sort of intent people, I have very grave doubts about whether what would come out at the end in the current, Senate and would be anything like what we hoped it would be. So it's a bit of a risky course in reforming any law. It's easy to say we would like it, but whether we can actually achieve it, I think, is quite another thing. I think it's a good question, but I'm sad to say I don't think there are easy answers when it comes to the law. It might not be ideal, but how easy is it to get it back into an ideal situation, I think is far from clear.
Yet we live in a world where many of us spend a lot of time putting into 140 characters or less a succinct form of an argument that maybe the limitations that are imposed by digital issues such as Twitter could actually give some guidance as to how we might get complex ideas simplified into a very small number of words, and that might actually be beneficial. We've got time for one more quick question.
Sorry, I've got one slightly facetious one,
Oh, right.
And that is to say that parliamentary draftsmen should include a decision tree at least once every 15 pages through an act, because most acts are almost unintelligible as to their decision tree.
Yes.
And one of the first things that you have to do as a lawyer is draw one up yourself.
Yeah.
Well, why am I doing all that work?
I bet there's an app for that.
Do we have any other questions? Okay, well, I'd like to... Yo, sorry.
I've got another question, but I just thought, since Peter, you've had a couple of shots at FOFA, I just thought I might take a minute to just say one or two words about FOFA, if I could. Because, from where I sit, which is the consumer side, and I was the chair of Choice for 10 years, all through the FOFA fight, FOFA, Future of Financial Advice, is about shifting from a supply-side market to a demand-side market. And I think, to say that giving transparency around pricing, i.e. allowing consumers to see what they're paying from their financial assets, that is not red tape to me. That's just the fundamental features of an efficient demand-driven market. So sorry, I couldn't resist. So I've spent so much of my life fighting for FOFA.
And you won at the moment, so far.
To the Senate. The Senate.
Left as it is.
All right, well, good news is that there are drinks outside after this, but what I'd like you to do is to thank the panel, Jane Van Belen, Peter Leonard, Louise McIlvogue and Greg Houston. Thank you.